Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Does your wholesale lender do this for you? Free customizable marketing materials, online loan tracking for your clients, returns your past clients to you, and complimentary client retention campaigns. Don't you think it's about time you found one that does? Partner with United Wholesale Mortgage and receive these benefits and more.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, and this is created exclusively for Mortgage News Network. It's brought to you by United Wholesale Mortgage, where they have created some incredible tools for you. All you have to do is use them, educate yourself, ask them to help you. And I'll tell you what, it will make you look as if you've put together some incredible pieces to help your clients and your referral sources. Now, if you don't use them, your competitors just might gain advantage on you. So get on that program. All right, with respect to what happened last week, it was a week where we saw the Fed influence the direction of the marketplace. And the Fed minutes came out. We had favorable Treasury auctions. And, you know, the market pretty much on the bond side got everything it wanted. A lot of appetite for treasuries, got A ratings on these important auctions. And the Fed came out and said that, look, we think inflation is very low. And inflation is the big enemy of interest rates. They said, we don't even think inflation is going to be an issue for a couple of years. So initially, the bond market reacted favorably. Interest rates actually dropped. But then something happened. Then the stock market kind of started to think about what the Fed's words were and what the Fed's feelings were about this and said, wait a minute, if the Fed's not going to take the punch bowl away for perhaps a very long time, doesn't look like a rate hike's in the cards, of course, for October, which they said was a lot of meeting, maybe not for December, and they start thinking, is March or later on in 2016 an issue? So the stock market began to rally. And that stock market rally drew money out of the bond market last week, and that's why you saw interest rates move a little bit higher towards the end of the week. But they're at a critical level now. There's something called the 200-day moving average, and that's kind of a ceiling on prices or a floor on prices if you're above it. And right now, mortgage bond prices are kind of like resting on that floor. Very important that they don't break beneath that, or we can see things get a lot worse. Conversely, that 10-year Treasury yield at around 212 is butting right up against that ceiling, and it's holding for now. But if we see yields on the 10-year Treasury close above 2.12 or higher, you can expect them to rise another 10, 12 basis points. And suddenly, you could be looking at mortgage rates about an eighth to a quarter% higher. So we are at a precipice now. We're at a very important pivot point. We have to watch this carefully. Watch 2.12 on the 10-year Treasury note yield. Or better yet, get a free subscription to MBS Highway. We'll be able to warn you about this, let you follow this every single day, so you'd be able to know ahead of time and be alerted, just like our subscribers were, for any reprices and get the very best pricing for your customers so nobody steals that away from you. Now, one of the things that the Fed cited was oil, and that's a very big thing. They say that the drop in oil prices has contributed to low inflation. But I want to show you something here, and that there could be an important change coming our way. Let's take a quick look here at oil prices over the past year. And when we look at oil prices here, I want to try and bring this up a little bit higher if I can. Okay. Now you can see in the past year, oil prices were about $90 a barrel, and they came way down, and right now they're at 50. But they did come down, and that started to happen in the latter parts of last year. When you take a look at December and January of last year, they were not only back to the levels that we see currently, but they were actually lower. So this benefit in low inflation that we have seen from oil prices dropping from $90 or so down to $40 or $50 or lower is something that is going to wind up going away over the next couple of months. I bring that up because as we head into those months, you may see some inflation numbers tick up, and the Fed is saying, we don't think inflation is going to be an issue for years to come. We may get a little bit of a whiff of inflation, and it could surprise the markets where the Fed may start to look at locking rates. So some quick takeaways here for you. I want to first of all tell you that we are at a very critical level. Watch 2.12 on the 10-year Treasury note, or get your MBS Highway and watch it every day and be alerted, where we call you and tell you. and warn your customers that you could see interest rates move by roughly 1/8 to 1/4% in a very short period of time next week. And the big event next week as far as interest rates will be that CPI report, Consumer Price Index. All right, hope you have a great week ahead. Bye-bye.